In 3, 2, 1. Hello, guys. Good morning. Welcome to our morning market update for this beautiful January the 7th of 2019. Hope you guys are having a great day. Interesting comments already here on YouTube. Hello, Angela. Well, let's see what George has to say about yesterday's rally. It nearly bit my profit off. We're going to talk about that today. It's funny that you should mention that, Angela. Welcome aboard. Welcome everyone on YouTube. Let's talk about a few things today. First and foremost, Iran yesterday said that they have 13 scenarios of retaliation against the United States for their response of killing their general. All right. And he said that the weakest of them would be a historic nightmare for America. It's pretty strong language, but markets really like to price in what they see rather than what they hear. You wouldn't believe that, since the trade war was a complete opposite. Everything that they heard would make a splash in the equity markets. But this is still new, it's fresh. And I think the market is not expecting a strong retaliation response by Iran. And I think that's a huge mistake. All right. If the retaliation or the response starts to creep in and news comes in or something happens, these markets will dump. I think they're artificially high. And the reason being is that the Federal Reserve has the markets back. Make no mistake, we're still in a bull market. I'm not saying here that this thing's going to come unglued, but I think we're ready for a pullback. And when you're trading at a top, oftentimes the skies are a little bit rocky. It's like a plane flying 40,000 feet in the air. It starts to get turbulent. The pilot asks for clearance to descend and brings you down to lower altitude temporarily. Then that's what I think the market is out for. We're still mid-flight. We're still headed higher, but I think prices are elevated and they're not factoring in the risk of a strong Iran response, which means that when it does come, the sell-off will be much brisker, faster, and more immediate than it would have been if it slowly sold off in anticipation of it. All right, typically markets discount rumor and then price in news. With this event, it's not showing the signs of any fear at the moment. The only way to see that sign of fear is gold. All right, somebody says, oh, well, I don't know if this thing, I think we're still bullish. For the long term, we're going to shrug off this Iran situation. Well, you're dead wrong if you look at gold. Gold doesn't agree. Gold's still up 40, 50 bucks an ounce and is looking to go even higher. All right, so that's sort of where we're at. We need to get some more information coming in. Yesterday, I tried the short right after I got off YouTube with you guys. I tried shorting the market. It was my only trade on the S&P 500. It didn't work. And I told the team in the room, you know what? I don't want to buy the S&P 500 market. Even if it goes up without me 60, 70 points from here in one day, I'm not going to be upset. I just don't want to buy the S&P. There's a lot of risk of holding a long risk position or long equity position when news could come out and really unseat this whole market. So if I'm not going to buy the S&P 500 market, I had other options. So I had to look around. So what we end up doing is shorting gold. So by not buying the S&P, you still have other options that could correlate with the bullishness. So we looked at the S&P moving up, and gold wasn't budging at all. And so we got ready to do the short gold trade. I didn't make as much profit as I wanted. I got out of it right before it dumped, but a lot of people in the room did get it. So it was a great opportunity. So sometimes you have to trade the correlation and not the main markets. I just personally didn't want to own the S&P. I tried the short, and then as soon as I shorted, I'm like, that's the wrong move. It looked strong. Early on in the morning, there's a lot of buyers. Like shorting this market for the whole day would be disastrous. Tried one short, didn't work, went into gold, made some of the money, then also looked at oil due to this volatility. So you don't always have to trade the same market. In fact, good traders trade multiple markets, so they don't have to force themselves to find an opportunity somewhere where they may not be comfortable with it or it may not exist. All right, other news, U.S. Defense Secretary Esper said that the U.S. does not have plans to pull out of Iraq. That's following a report yesterday from AFP news source saying that the U.S. Army told Iraq that they're pulling out. That is not happening. They're going to stay there and maintain their presence in all the bases. They have so many bases in Iraq. And so the U.S. will maintain its presence. So that's off the calendar. How are other traders doing? Well, it's always important to measure ourselves against other traders. Hedge funds last year returned just 8.6% in 2019. Doesn't sound like a bad return, but then when you look at the fact that the S&P did 32%, you can see that hedge funds are less than 1/3 of the performance and charge 2% administration fees and 20% of performance. So not only do they gain 8.6%, they're going to charge 20% of that to the customer, the end user, which is why hedge funds are not doing good. A lot of them are closing in large numbers or reducing their fees to trying to stay competitive with this passive market model. which, by the way, I think this whole indexing isn't going to work out very well in the first bear market it encounters. But that's not now anyways. We don't have to worry about that. Here's some cool stats for this morning market update. The first 5 days of January dictate the way the whole year will go. Hear me out. You might be like, what the heck? That's ridiculous. The last 44 up first 5-day periods. So the last 44 years of bullish 5-day consecutive days of the start of the year, 36 times of that, or 81.8%, the market has finished stronger. There's only 8 exceptions, with the most recent one being 2018. 2018, of course, the yield curve was inverted. The Federal Reserve was tightening like madmen, and there was a trade war as well that was getting more tense with China. So that's a notable exception. All right. Presidential years have an even more solid track record for this statistic. Last 17 presidential election years, 14 full years follow the direction of the first 5 days. So how are the first 5 days doing so far? Well, we don't know yet. The first 5 days aren't done until tomorrow. But so far, we're up 7.25 points for the year, or 0.22% since the start of the year. So if that's an indication, it's slightly positive for now, but we still got some time to battle it out. All right, in today's markets, Japan's up 1.6, Hong Kong up 0.3, China up 0.7%, India up 0.5%. In Europe at midday, London's up 0.1, Paris is up 0.6%, Frankfurt up 1.1%, and in the United States, Dow and S&P we're up 0.2. They shed their gains. Now we're below yesterday's closing level. All right, the positive expectancy for today for Dow is 47.6%, so less than half. 52.4 for S&P and 52.4 for NASDAQ. So pretty neutral day. I think today we're going to get a little bit of selling to the downside off the open. And if the bulls can hold their support structure from the overnight lows, we could really start to get excited for a trade to the upside. If we can't take out the resistance, then the trade will open to the downside. There's also potential in the next couple of days after a lot of this movement, the market just goes sideways until we find out what the Iran response is going to be. All right, so today's market's a mixed bag of nuts. There's a lot of uncertainty overhanging. The volatility index yesterday crept up, but then sold off. The U.S. dollar is driving higher, and we got some really good, or not good, but we have one really important economic announcement today at 10 a.m. ISM non-manufacturing index comes out. That can move the market if there's a big miss or a big hit, if you will, if it exceeds or misses the expected numbers. We'll cover that in our trade room around 9:50, 9:55. Crude oil is down 0.6%, shedding some of the gains from yesterday's session. Yesterday's session was pretty bearish too. Hang on, January 6th. Yeah. Shedding some of the overnight gains, I should say. Gold prices for the moment are flat. They're hanging around. They're open. Pit session opened about an hour ago, just under an hour ago. All right, Bitcoin's up 4.25% to 7,800. 10-year yields across the globe seem to be flat for the day. The biggest mover being the Japanese 10-year bond. 10-year in the U.S. is hovering at 1.805. Very little movement there. All right, today's economic calendar, like we said, international trade already came out at 8:30. ISM non-manufacturing index coming out at 10. Factory orders at 10 a.m. as well. At 1 p.m. result of a 38 billion 3-year note auction. I think this market today will have a little bit more movement early on after the open. We always wait the first 5 minutes out and then do our first trade. And then I think that if we don't get any news coming in, then at around 9:45 or so, we slow down for the ISM numbers. And then after that, if their ISM misses, we could go in a consolidation range for the day. Be careful, all right? When we expect a lot of volatility, when too many people expect a lot of volatility, consolidations tend to happen. All right, that's what we got for the day. Richard, I don't know what you're so angry about. You should unsubscribe if that's how you feel, brother. Have a good one. Am I nuts? Iran said there won't be an immediate retaliation. Iran said that? I don't know what you're going on about, Richard, but if you're that upset, I think that we're not going to be good friends anyways. Is gold still bullish, said Srinivas. What happened to trade talks? Any idea? So there's a delegation on its way here to, not here, but into Washington in the United States, and they're expected to sign this new phase 1 trade deal on January 15th. China overnight said that there are still a few last items to iron out, but the expectation is they're coming in. They're going to sign a deal for January 15th. All right. That's what we got, guys. Let me just see some of the comments. Da, 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 da. Thanks, Richard. It's true, I don't just make all this stuff up. Let's get started, guys. We're opening up the trading room. We got a lot of opportunity today. Let's make some money. Yesterday we did pretty good. It was about 63% were positive in our live room. Today, let's push that number and get a little bit more into the green territory. Love you guys on YouTube. You have yourself a fantastic rest of your days, and I will see you tomorrow. Take care. Manage your risk, TRADEPRO. Let's open up the room and start out with oil. Goodbye, YouTube.